Hi, and welcome to today's webinar. I am Nicolette Pomper-van Zyl, editor of ESI Africa, and your moderator for today's discussion, hosted in collaboration with Future Energy East Africa, taking place on the 17th and 18th of September in Nairobi. Joining me on air are three professionals who are ready to provide insight and answer your questions. Before I introduce them, listeners, please take note that you will have access to the recording and PowerPoint presentations after the broadcast on our website. To ask our guests a question, use your Q&A box on the left-hand side of your screen. I'm now pleased to introduce Peter Page from Responsibility Investments, Jack Radmore from Green Cape, and Navesh Govender from Sapphire. Welcome to the studio, gentlemen. Listeners, to find out more about Navesh, Peter, Jack, and the Future Energy East Africa or myself, please toggle through the tabs at the top of your screen. For those of you who have just joined us, welcome as well. To get you thinking about the subject matter at hand, listeners, please answer the question that is on your screen now. The question is, do you need more information to convince you to take on solar power? So now to business. To start off the discussion, I will now ask each of our guest speakers to give an opening statement. Peter, if you'll please take over the slide deck and give your opening statement.
Sure. Thanks, Nicolette, for this kind introduction. So hello, everyone. My name is Peter Page. I'm currently working for Responsibility Investments, so an asset manager specialized in development investments across emerging markets. We are currently managing over a dozen of investment vehicles in both equity and debt funds in three main sectors. The main one being the MFI, so the microfinance institution sector, which has grown tremendously over the past 10 years, and more recently have looked into agriculture and energy sectors. I am myself part of the energy debt team within Responsibility. We currently invest through mainly two funds. A large fund called the Global Climate Partnership Funds, which invests either directly into renewable energy projects and energy efficiency projects for companies, or also has green lending type of financing, so through banks, which then on-lend the funds to these renewable energy projects for companies. And we also manage a second fund, which is a smaller fund, called the Energy Access Fund, which is mainly targeting energy access type of products and companies. And now we're scaling this fund to also include C&I type of companies, so all the commercial industrial solar solutions. So we look at a wide range of solar solutions. As mentioned, solar home systems. So these are typically smaller systems from 1 watt up to 1 kilowatt peak. Here, customers are mainly residential, off-grid customers. You look at a solar panel, maybe also additional appliances like a TV, a fridge, etc. And we look at financing also up to utility-scale projects. So these are grid-connected projects with a utility power purchase agreement, so they're a government offtake. And in the middle there you see our topic of interest today, which is C&I installations. So they're mainly targeting customers which are commercial industrial customers, factories, poultry farms, universities, banks, etc. And these systems can be ground mounted or rooftop mounted. So a year ago we started a study with BloombergNEF. And we try to assess and understand the potential of C&I across sub-Saharan Africa. And so we did a project with them divided in two phases. The first phase was to get an overview of the key markets which are attractive to the C&I market. So they're based on economics. So how expensive is solar versus other energy sources such as diesel, such as the grids, looking also at the regulatory framework. Are there tax incentives for these CNI installations? Is there any hindrance in providing these solutions in different markets, and also, of course, market momentum? So how large is this market, and how is this evolving, planned to evolve over time? And so we nailed down in phase 2 3 key markets. So Nigeria, Kenya, and Ghana, based on these 3 indicators. So without going in too much detail in the study, I wanted to highlight a couple of key points, more from a financier's point of view. And I think this ties very well with also the fact that this market is relatively early stage in Sub-Saharan Africa. I'm excluding South Africa because I think this is also a different type of animal, a different type of market than Kenya, Nigeria, Ghana, for example. But there has been a lack of financing available in the market, given some of these CNI developers, companies, or EPCs are installing, systems not on a direct purchase, we'll see this later on, but on a power purchase agreement or on a leasing basis. Hence, this makes the capital requirements increase over time. So there has been a lack of investment, especially from equity and debt providers. Given the lack of track record in the markets, typically debt providers are coming more with a project finance type of approach, which doesn't really work if you're looking at a project by project basis, especially if these systems are relatively small in size, so the due diligence is too complex. So now we're seeing more transition towards a portfolio view, a global view of financing these CNI projects. So without overdue, maybe I stop here, and we'll have further time to go into questions.
Thank you so much, Peter. That was very interesting, and as you say, we will go into that in a little bit more detail later on. Somebody has asked if the Bloomberg research is available anywhere, and I'm sure that it is online because I know we have it on our website, and we will provide the link in our post-event report on this. Thank you so much. I would now like to ask Jack to please give his opening statement. Thank you so much, Jack. Please take over the slide deck.
Sure. Good afternoon, everybody. Thank you so much for giving me the opportunity to join today. So as was introduced, my name is Jack Radmore, and I am the Energy Program Manager at GreenCape. GreenCape is a sector development agency based in the Western Cape, and we have the focus to try and drive the growth of the green economy across the country. And we really look at 2 things. So the first being increase in job creation, and then increasing the availability of investment flowing into the market. And we work in everything from renewable energy to energy efficiency, water, waste, and agriculture across the board. So I thought it would be really useful to just kick off the conversation just with a little bit of context around the South African PV market. And most of my information will be very much focused on the South African space. So over the last 12 months, we've really seen a massive boom in the markets. We've seen upwards of 250 megawatts of rooftop PV being installed, and that is dominated by the CNI space, with a little bit of the agriculture market taking into that space as well. Currently, it puts us at a total installed capacity across the whole of South Africa at upwards of 850 megawatt peak. To put that in a bit of context, that results in about 15 to 20% of Kusile coal fire station, one of the biggest coal fire stations in South Africa. So really a lot of growth in the market. By the end of the year, we're really expecting that this market will get well over the 1 gigawatt peak range, really pushing us into a whole new ball game, and really bringing a lot of investments into the country. We're expecting that this market will bring upwards of 5 billion rand per annum and result in a market of about 75 billion rand by 2035. So really a lot of investment moving into this space, and a lot of companies and individuals really starting to take on this opportunity. What we've seen is there are four main drivers that are really pushing growth in this market. The first is around regulatory certainty. We're seeing a lot of innovation in terms of business models and availability from sort of the distributor side as well. We're also obviously seeing the price of renewable energy coming down, specifically in the solar PV space. And then the last is what we have to talk about today, and that's the sort of finance availability. So I thought just as an opening statement, I'll jump into each of these very, very quickly. So the first being sort of the regulatory certainty space. And the map that I've given here on the right-hand side is that of the Western Cape. And the municipalities that are highlighted there in dark green are the municipalities that already have the regulations to allow embedded generation to connect to the grid and to feed energy back onto the grid and to get paid, and customers get paid for that energy to be fed back onto the grid. Around South Africa, there are about 60 municipalities that have all of these in place, and that number is growing on a weekly basis. On the left-hand side, the table really speaks to national government commitment to the space. So for the first time, we've seen distributed generation, which is this sort of size from 0 to 1 megawatt, being classified in the integrated resource plan. And you can see for the next 3 or 4 years, it's an open allocation, which means there's a massive incentive from national government side to promote the uptake of this type of generation. So we're really seeing that national government and local government putting a pin in the or putting a peg in the sand for which direction they want to go. We're also seeing the prices continue to drop. So in this table, in the commercial and industrial space, the size of systems is closer to the 500 kilowatt peak and up, and really brings us down to a point of the levelized cost of energy or what you're paying per kilowatt hour of between 85 Rand cents and 1 Rand 15. If you start to compare that to traditional municipal tariffs, you'll see that we're very quickly becoming price competitive with the municipal tariff space. And here we're seeing this price continue to drop, and obviously once storage, etc., comes in, we're really going to start to see the space growing and developing there as well. Just quickly on the innovative business model side, we're seeing municipalities starting to engage and explore options around energy wheeling and energy trading. So here's an example where you could install a slightly larger system off-site and wheel the energy back to your site. These are really exciting models that start to unlock the availability of larger and larger generation sources for individual customers. And then lastly, this availability of finance. So one thing that we've learned over the last little while is the availability of finance is not necessarily the issue in the South African market, but it's sort of understanding where that finance is available. So at the beginning of this year, or sort of in the middle of this year, Green Cape released a financing brief that basically lays out everything that's available from commercial banks in terms of what finance offering they're available, sort of how they structure it, what they're looking for in terms of risk mitigation, and who the person is to speak to. And the same for a couple of the innovative funds that are floating around, including Property Assessed Clean Energy Program, some Sun Exchange, a great company looking at crowdsourcing, so really outlaying quite a lot of available funding mechanisms in the market. So I think for now that sort of is where we're going. Oh, sorry, the one last thing I wanted to add was the availability of additional incentives above traditional financing. So I've already mentioned the availability of feed-in tariffs that's growing. We also see a number of different tax incentives, from everything from 100% depreciation in the first year of the solar assets, solar being VAT deductible, and then a couple of really exciting initiatives coming on board with the carbon tax being registered into law earlier this year, really starting to open up the availability of these sort of additional incentives beyond just traditional capital financing. I think that gives us a nice sort of starting point from my perspective.
Thank you so much, Jack. And as you mentioned, I'm so glad that you mentioned the carbon taxes. I think that's going to be a big driver where the commercial and industrial sector is concerned, looking at financing these models. I'd now like to ask Navesh to please give your opening statement. If you can take over the slide deck. Thank you so much.
Thank you, Nicolette. Just going to try to open my slides. But in terms of an introduction, I've been introduced. My name is Navesh Govender. I'm the Chief Operating Officer of the South African Photovoltaic Industry Association. So my presentation is going to focus mainly on the South African market and the industry here in South Africa. I'm running into a little bit of technical difficulties. I think my presentation is not coming up.
Navesh, I see
Nicolette,
your presentation is there. Do you want to start the presentation?
The system.
Not a problem. You can run through your presentation, and I will do your slides for you.
Okay, perfect. So just in terms of an introduction of the association, we are a non-for-profit industry association representing solar PV in South Africa with the aim of promoting a viable solar PV market. We do this in two ways. One, by becoming the trusted partner to government and lobbying in terms of policies and regulations. And two is supporting our members in terms of promoting their services and products. In terms of the graph that you will see, our membership numbers have grown year on year since around 2010 when the association started. We currently sit on over 320 companies across the value chain of solar PV here in South Africa, mainly EPCs and installing companies, but also representing the finance sector, the training sector, the IPPs, the O&Ms, the full value chain, manufacturers, the full value chain of solar PV. My next slide. Nicolette, I don't see the slide. Can you just tell me what the next slide is?
Yes. The next slide is context.
Okay, to give you context, so this is just in terms of irradiation in South Africa. I normally do a comparison between South Africa and Germany, showing that the worst irradiation in Germany is the worst irradiation in South Africa is equivalent to the best there in Germany. And then just in terms of policy context, that South Africa has a target of 8.4 megawatts in our policy or energy mix, whereas Germany has 52 megawatts. And just in terms of where we are in the South African context and the policies that we have. Sorry, Nicolette, I just have to apologize. I don't have the presentation in front of me, so I'm trying to remember what's on the slide.
Not a problem.
Yes, I think I'm going to go to the next slide.
Okay.
I just think that's
right,
the
so
examples of installations. So we've seen the transition from the renewable energy IPP program or utility scale installations moving towards small scale embedded generation, which is what we call it, or we call it the residential, commercial, industrial market. And this is anything up to 10 megawatts. And I just gave you some examples of installations that have been done. And the industry assumptions on that. The data around this in South Africa is very difficult. So the assumptions on there is that we assume that the industry has reached around 400 megawatts, which we took from the CSIR. So that's the CSIR research number. And from here, I think almost 3,000 jobs have been created in the SSDG space. The carbon reduction number is on there. The number of installations is around 60,000. So that's just a couple of assumptions that we have as industry. My last slide is just a couple of key areas, I think, that I would like to highlight in terms of this discussion. So the first one being policies and regulations. We are still working on having, I think Jack has alluded to the IRP allocation. We are still working towards having that IRP confirmed and accepted. Regulations that also allow for SSEG in terms of the rules of installation, and the rest of the topics that are listed on there. So standards to ensure that quality is ensured with these installations, a range of financing tools, and those are just a couple of discussion points that I wanted to start off with.
All right, thank you so much. I know that was very difficult not having your slides in front of you, but I absolutely love your last slide that you have showing the new evolution. All right, so thank you so much to our
presentation.
Hmm? Sorry?
I'm just saying I took that from an ESCOM presentation and thought I would share it with everyone.
All right. All right, so earlier we had asked our listeners to take a very quick survey question, and I was very surprised by the results. The question asking if you needed more information, and the majority said no, you don't need more information. However, we do have another quick survey that we'd like you to take, and that is asking what information would be necessary for you to invest in solar power. So there we would like you to just give us an idea of what is important for you to really understand or know about, or information that you think is important for other people to know in order to invest in this market. So, and just a reminder to our listeners that you can type your questions into the Q&A box on the left-hand side of your screen. We have been getting quite a number of questions coming through. And so I'd like to start with a bit of Q&A with our panelists. And Peter, starting with you, you gave a presentation around the study that you had conducted. So can you give us a little bit more information around the results that came from the Solar for Businesses in sub-Saharan Africa?
Sure, Nicolette, thanks for this question. So, you know, this study was extremely interesting for us at Responsibility, and, you know, starting to look at the CNI market across sub-Saharan Africa maybe a year and a half back, you know, we needed to put some data points and clearly see, you know, what was happening in the market from a quantitative point of view. So the whole figures on, you know, price sensitivities, you know, a cost versus, you know, grid tariffs, this was extremely interesting for us, and also understanding the key trends in the market. So where is this market going in the next 1 to 2, 3 years? One key aspect I would like to highlight is the business models of these CNI developers and EPCs, so these solar installers, is shifting from a direct purchase. So, you know, a direct purchase is typically the off-taker or the client would purchase the system up front, and this is shifting to lease agreements or power purchase agreements. So these are more flexible terms. There, the off-taker or the customer would typically not, you know, pay up front, let's say, 1 million for his 1 megawatt plant, but would pay installments over time for leasing the energy from this asset. So that's a very interesting movement, and also requires, as I mentioned at the beginning of the presentation, quite a lot of capital requirements from these installers. But also less capital requirements from the off-taker and from the customer. What we're seeing also is, given the larger scale PV projects, you know, grid connected with, you know, government PPAs, are taking, you know, more time. They're, you know, due to regulations, it's been a very slow and expensive process. We are seeing the market, you know, turn towards more decentralized type of energy, and especially towards, you know, CNI, but also, you know, mini grids, solar home systems for people who are don't have even access to this grid. So we are seeing this dynamic of shifting from a centralized utility scale system, that we also have in Europe, for example, in America, towards more a decentralized system. So I think that's also a very important that came up with this report. Also, Jack, mentioned there on the cost side, solar is becoming, a viable option, and we are seeing that from an economic perspective, solar does make sense and makes even more sense in certain countries. If you take, for example, Ghana, where the grid tariff is extremely high, their customers can save 20, 30, 40% on their electricity bills by installing solar systems. Kenya as well is a good example of this. Nigeria is even more dramatic, given the reliability issues of the grids. So there, what we see is that developers, installers not just come in with a solar panel, but also provide, battery storage. I believe there was a question on storage, and if this is becoming economically viable. In certain conditions, yes, if you couple it with solar, with the grid, with diesel generators, and depending on the load profile from the customer, from the manufacturing customer, for example, and let's say the customer is operating seven days a week, this is becoming a more cost-effective option than just having diesel generators. If you compare solar to diesel generators, there you're 30% cheaper. So I think that was also extremely interesting to understand the large potential of C&I solar solutions across the continents. Other key point is that really it is an early stage market in sub-Saharan Africa, excluding South Africa. As you saw the figures from Jack and Nivesh, South Africa is more developed in many ways, but across the continent it is relatively early stage, but the growth expectations, from talking to developers, their pipeline is becoming larger and larger because of this business, and this economic incentive from off-takers to actually get reliable, get cheaper power, get cleaner energy. We didn't talk too much about cleaner energy, but a lot of multinationals, these are more the international firms which are looking also to get access to cleaner energy, and then they have a different motivation from economic and reliability, but more from a clean energy targets point of view. And also one key aspect to mention is that regulations can be very determining in certain markets. I'd like to highlight Ghana, for example, where there are some local content and local participation laws, for international companies, which are slightly hindering the market. Local content, especially a certain percentage of solar panels, for example, will need to be manufactured in Ghana, which is currently not the case. So we need to get some good policies in place there. Also, a lot of respondents to the study mentioned tax incentives for solar developers and solar installers to make sure we can grow this market in a sustainable way over time. Sales cycle for these companies are shortening, and it seems that customers are getting used to more and more to solar technology. So this, again, a very positive point for the markets. I think that was all. It was a high-level overview of the key aspects, key outcomes of the study. But yeah, as Nicolette mentioned, this will be available for you to read in peace and in quiet.
Thank you so much, Peter. That's a lot of information, and as you say, the full study will be available to our listeners. Jack, we have a question for you around regulation. So in terms of the regulation aspect in this market, what are the barriers that deter growth, and what has been done to remove these challenges or bottlenecks?
Sure. So I'm going to steal back the slides, if you don't mind. and just jump back to my slides and the regulations. And I think this is a really important question, and I think the main bottleneck boils down to regulatory certainty. So if I make a decision now, will something drastically change 1 year, 2 years, 3 years down the line that would make what I've done illegal or sort of require me to make significant changes? And I think there's been a lot of work happening starting very much on a municipal level. So this conversation around embedded generation or solar PV very much impacts local municipalities. So it was really them that started this sort of big movement with support from a lot of organizations. And they started with this push around setting bylaws and regulations as to how customers are allowed to connect to their grid. And the real important part of this is around safety and security of the grid infrastructure. And once we started to see a sort of a decent amount of municipalities moving in that space, we saw a response from national government. And there it was the big call around re-looking at the license regulations on a national basis to understand how and where certain sizes of generators need to register or need to have full generation licenses. What we're seeing the move towards is that generators between 0 and 1 megawatt, which is the majority of installations in this space, will only be required to register their installations with their local municipal authority and with the national regulator. So they won't have to go through a whole generation license process. So that will make that whole process a lot quicker and cheaper. Then from a municipal point of view, they require registration and a shift towards a small-scale embedded generation tariff. What that will allow is customers to get paid a feed-in tariff or a net metering tariff when they actually feed energy back onto the grid. But will also allow customers, or the municipalities, to build in some element of a fixed charge into the tariff. And this is a really important step in the South African regulatory space, is to allow the distribution and transmission utilities, being municipalities and Eskom, to recover the costs that are fixed with maintaining the overall grid. And that's quite a big step towards what we see as being the sort of distributed, liberalized sort of market space, where you have multiple generators, a single entity managing the actual grid infrastructure, and then multiple customers. Instead of now where we see a single entity managing all the generation, municipalities playing a role somewhere in the distribution space, and then customers. So we really are seeing the regulatory space move forward. There are a couple of big sort of roadblocks still in the way. I mentioned earlier the integrated resource plan that we're still waiting for. So a draft has been sent for public comment, but we're waiting for that to be finalized. Once that's been finalized, we will see the National Minister of Energy Resources and Minerals actually make a change to the Electricity Regulations Act that lies out or outlines exactly how generators of this size will need to register. From that point, we will see the National Energy Regulator put together regulations on how municipalities can move forward. And we're seeing they will work very much with what municipalities are currently doing. From that point, it will all be in the municipalities' hands to promote and allow grid connection, to establish their sort of feed-in tariff regime and move that forward. So although it seems like this is taking a long time, and it is, there is a lot of work sort of happening in the background to make sure that the regulatory space is clear and that sort of customers looking to install and companies looking to invest can have a very clear path forward where we can make long-term decisions based on very clear regulatory spaces. I hope that answers some of the questions.
Thank you so much. That was a lot of information, and I'm sure that people will even have more questions around that now. But Navesh, let's now talk about risks and opportunities. And very briefly, what should listeners take into consideration when installing a renewable energy system at their premises? Hi, Nivesh, are you there?
I think
thanks.
In terms of opportunities and risks, it's a very general question, so there's a lot that I can cover under it, but I'm going to highlight a few key points. So in terms of opportunities, I think Jack has highlighted the technological advancements that we're seeing in PV that continuously develops. There's a reduced in cost of the components and PV modules in particular. For the C&I space particularly, there is a matching of load curves which makes business sense for them to do these installations. There is market maturity here in South Africa, so we see a growing market in the SSG space over the last 4 or 5 years. There are more and more diverse financing options available, and I think the other speakers have spoken and covered that one. The payback period, if we look at a payback period for one of these systems, it could be anything between 3 and 8 years, depending how that finance is structured and how the installation is done. There's carbon reductions, and obviously the list goes on with opportunities, right? In terms of risks, there are risks, and there are key points that I'd like people to be aware of. In terms of technical risk, there's always a risk in terms of the components that you use and the compliance of those components specific to the grid that you're connecting to. In terms of the installation and the wiring and the safety that goes with that installation, the grid connection to make sure that it is compliant to the grid connection, the performance of your installation or your system that you're putting out to make sure that the yield analysis is done right and the generation is correctly estimated. In terms of the quality of power, you also need to make sure that the quality being generated matches that of the grid or is acceptable by the distribution grid. If you look at more general risks, the weather risks in terms of lightning and surge protection should be looked at, wind loads in certain areas of the country. Financial risks, I think the other speakers have covered this better than I would, but there are risks in terms of the capex and the payback of that capex, of how you get that the upfront capital to put up the system. And something that a lot of people forget is that there is a maintenance cost to these installations and should not be forgotten or left out of your calculations. Project management risk, this just covers delivery of components, making sure you're on time, skilled people to do the installation. And of course, Jack has just touched on the policy and regulatory risk. There is the uncertainty in terms of having these policies and regulations finalized and the rules associated with them. Safety standards, we still do not have national safety standards, but it's a regulatory risk for us. And then the connection requirements to make sure that the distributors are comfortable with the connections that are being made. That is in terms of a high-level opportunity center stuff.
Thank you so much, Nivesh. We had asked another survey question, and we have the results in now. And at the top of the information that is needed, a list, is the cost implication, which came in at 78.13%. And I think this is a real worry for any business, commercial or industrial, or even residential household that is looking to invest in this kind of system. In second place came local regulation. Understanding that, I think, is important. In third place, technical requirements, and I think that comes in when you're deciding on the system that you want. And lastly, at 32.81% was the maintenance and upkeep of systems. I was going to ask our speakers to just unpack that a little bit. However, we've got some really interesting questions coming in from our live audience, so I'm rather going to ask those questions. And starting off, Peter, we have a question here which asks, is it possible to establish a facility through which to raise a large pool of funds to roll out across multiple smaller projects that meet certain criteria? Would you please give your response on that?
That's a very good question, and it's actually one of the questions we are asking ourselves as a debt investor. How can we pool in a certain amount of projects and make our life easier and our transaction much easier, and be able to fund, let's say, up to 10 million of projects in one go. So the way we've structured this in the past is looking at a holding company asset co type of approach. So you would typically have several entities at several levels. So if you're looking at just take the example of a developer, installing projects across Kenya, Nigeria, and Ghana. So in this case, typically the developer would have a holding entity, for example, in Mauritius or in another jurisdiction, and then underlying asset companies in Kenya, in Nigeria, and in Ghana. And the different local entities would hold the different assets which are installed. So then on our side, or on another investor, debt or equity investor, coming in, they would come in at a holding level, so let's say a Mauritius-based level, and then be able to fund the projects at the different underlying asset cos. So in this way, we try and pool in the capital up to a certain amount, and then we can disperse over time, meeting certain eligibility criteria. So we want to have let's say, a project finance light type of approach, and not a project finance, very detailed, given we wouldn't look at every single off-taker in all details, but we would have a certain framework in place, size of system, type of customer, type of credit worthiness, type of system, and then we would disperse over time or in one go, depending on the size of the installations, and then like this would engage in a more efficient approach. So that was, I hope that answered the question on how to roll out funds in multiple jurisdictions. Yeah.
Thank you so much for that response. Navesh, we have a question around small-scale embedded generation. And the question from the audience member is, what do you anticipate the rules for 1 to 10 megawatt SSEG will entail, and how soon can developers expect to obtain approval from NASA?
This is an interesting question. So with regards to 1 to 10 megawatt projects, there are two requirements. The first one is a deviation from the Minister of Energy to deviate from the current IRP, as there's no allocation for these projects. So they would have to apply to the Minister to provide a letter of deviation. The second requirement is then a license for generating through this project. Recently, the Minister has provided a blanket letter that covers 1 to 10 megawatt project up to 500 megawatts that would not require a deviation letter from the Minister of Energy. So that requirement is taken care of, and that is not required anymore. The second part is the licensing requirement. As it stands, NERSA will enforce a full licensing process on these 1 to 10 megawatt projects. And as industry, or as the industry association, we are fighting back or pushing back on NERSA to ensure that this is a tad bit easier for these projects, as it's not utility scale projects. So we are looking at a license light process, or a process that's just a little bit lighter than a full licensing process, but not as simple as just a registration for under 1 megawatt. So there needs to be some middle ground on it. In terms of timeline, so currently you are allowed to do your applications to NERSA for the license, the generation license, and they will process that. In terms of having a license-like process, I would say maybe in the next 12 months, we would see a reduced process.
Thank you so much for that response. I think it is a difficult one in knowing what NASA is going to do. Jack, I have a question here which is specifically addressed to you, and the audience member says, hello Jack, have there been any further developments to accompanying rising embedded generation by a ring-fenced SSEG fund to curtail the price impact of distributed renewables on poorer electricity customers?
Yeah, so it's a really exciting question, and it's a difficult question. But maybe just before I get onto that, just to add to Peter's answer, this whole question around bundling of smaller projects into a pipeline for an investor has been one that's been floating around in the South African market for a number of years, and it's always sort of been somewhat theoretical. But earlier last month, I think it was sort of the beginning of August, the Solar Group announced that they had raised 400 million rand through AIM and Nedbank Finance to do exactly that, so to bundle sort of projects together into a larger pipeline. So we're really starting to see that this is becoming a reality and moving forward. So that's really exciting for the market. In terms of the sort of subsidies and cross impacts on poorer customers, it's a really, really important question. And what it boils down to is how the municipal revenue model has been designed. So in traditional municipal revenue, the municipalities gain somewhere between 50 and 70% of their total revenue from electricity sales. And most of, or sort of a large portion of that revenue is then passed over to, I don't like using the word subsidize, but to subsidize both other services, so your waste collection, water, etc., and also to subsidize the price of energy that poorer customers are paying. So when you're starting to have these larger customers that are sort of essentially cross-subsidizing these poorer customers, start to install embedded generation, we start to see a reduction in the amounts of revenue coming into the municipality, and that, by the way, will impact these poorer customers. So the first step that we're trying to get municipalities to take is to get a very good understanding of where those different costs lie and how best to map them out. So once they have a good understanding of, or sort of strong cost of supply study to understand what are their current fixed charges, what are their variable costs coming through from Eskom, and how much is that current subsidy, we have a much better ability to then start to map out how do we not impact that subsidy. So one approach that has been highlighted, and it's got its pros and its cons, would be to move that current sort of subsidy that's going to poorer customers into a fixed charge that is being charged to larger customers. So to classify it as an unchangeable charge, so it's not at risk to sort of volume fluctuation of energy sales. So that's one way that's really being promoted as a potential move forward. But the first real step is having those cost of supply studies in place. And over the last couple of years, we've really seen that minimal municipalities have been able to get those to a sort of a reliable level. So that really is the first step we're trying to get municipalities to take, is to have those detailed cost of supply studies in place.
Thank you so much, Jack. We are almost running out of time, but I do still want to take at least 3 more questions. So very quickly, Peter, we have a question around which banks are most involved in financing of renewable energy, specifically in Kenya, Ghana, and Nigeria. And I suppose this is what has come out of your study.
Exactly. I mean, looking more specifically at which banks are financing CNI projects, CNI solar projects in these 3 countries. To be honest, not much. Not many of these banks are. Or if they are financing, then the rates are extremely high. There is in Nigeria, you'll see in the study, Bank of Industry, which is financing, which has funding available towards the CNI markets. Not sure at present if they have dispersed any of these funds. I recall beginning of the year they hadn't. So it's a challenge for local banks to get involved in this space. These lenders would need to have a more kind of flexible approach, more innovative way of structuring deals. And I think that's where responsibility and funders like us come in. Having more this portfolio approach, as Jack mentioned, Investec, Nedbank, Standard. These guys in South Africa are innovating towards CNI, but I think elsewhere across the continent, it's very limited.
Thank you so much. Navesh, a question for you around regulation again. What is the regulatory situation around wheeling of power in South Africa?
Thanks, Nicolette. So as far as my knowledge will allow, we do have trading and wheeling rules at Eskom particularly. These were established in 2012 last, but they are specific to Eskom and they provide the guidelines for wheeling in the country. We have now requested that NERSA review these rules and then apply them nationally across different municipalities, all municipalities, all distributors. So that's under discussion currently. We do have a couple of industry players trying to test how wheeling would work in the South African context. It's proving not to be feasible once you have wheeling costs included in your project cost, and that's where we are currently with wheeling.
Thank you so much for that response. And Jack, we have a question around small developers. How can small developers and installers obtain access to financing to allow them to offer power purchase agreements to their clients?
Yeah, so there are a number of sort of available funds, and they're slightly harder to come by and sort of really depend on sort of personal relationships. But one trend we are seeing is that the majority of installations currently taking place are actually moving away from sort of the PPA space for some reason. And it seems to be that there's sort of a bit of lack of trust in the industry still. Customers asking the question, if I sign up to a PPA now, will the company still be alive to sort of follow up with the operations and maintenance going forward? So I think that the question of where to access that funding is a big one that sort of still needs to be answered. The banks have some available funds that they're looking to access under F&B, are particularly interested in looking at this PPA space, where the other banks are looking more at sort of a debt sort of mechanism. One of the really exciting innovations coming up in South Africa is what they're calling property assessed clean energy. So it's PACE for short. PACE has been very successful in the States for rolling out this funding. And basically what it does is it links the installation of the asset, so in this case solar PV, to the property value. And then a larger funder then flows the funding through to smaller installers where they're actually able to make the installation, and repayment on the asset, instead of going through sort of the PPA route, moves more to an addition to your property tax. So it flows back through the municipality that's collecting the taxes and back to the overall funder. So this is sort of one variation where the market seems to be moving. But in terms of sort of exact funds that are currently available for smaller installers, unfortunately, I don't have an answer right now.
Thank you so much. We are almost running out of time, so I would like to, instead of taking more questions, I would like to ask each of our guest speakers to give us a last thought, a closing statement, if you would have it, just a final thing to leave our listeners with. I'd like to start off with Peter, please, if you'd give your final thought.
Sure. So, I think the CNI market is, from all the discussions we're having, is taking off across Sub-Saharan Africa. If you compare it, for example, with the Southeast Asian market to India, where there you see tremendous growth numbers, this could definitely the next kind of India or Southeast Asia growth market for CNI projects. The demand is there. I think the customers are becoming aware of the potential of solar, especially looking at from an economic perspective, cost reduction for their electricity bills. So in general, this solution makes sense. I think we're seeing this movement not just across Sub-Saharan Africa, but across the world. People are looking at solar, not just solar, wind, hydro as well, but solar especially as a sustainable source of energy, and especially in these growing markets, this will definitely be a driving factor in the near future.
Thank you so much, Peter. And Jack, what are your final pearls of wisdom that you would like to leave with our listeners?
Yeah, I'm disappointed that we're ending so quickly. There's so many interesting questions popping up here. I think that the final thought, and I know a lot of information, is that in the South African context at least, the availability of customer-side finance for the installation of renewable energy in the CNI space is no longer a barrier. There is a number of different funding mechanisms available, and I saw sort of cost being highlighted as the biggest sort of barrier or concern. If we take, for example, the commercial bank offerings, they will only provide financing if they, after an energy audit, can see that the customer, the savings the customer will generate from the installation will outweigh the repayments on their loan. So the customer will be left, either revenue positive or cost neutral, as it would be. So I think, the big push from our side is to understand that there's a lot of financing out there. We just need to make sure that it's sort of obvious as to where to find it. So one of the questions was whether or not the Green Cape finance brief will be available. So it is on our website, which is just www.greencape.co.za, and it's under the library on the right-hand corner. You'll be able to find that brief, including all the different available funding mechanisms from the banks, as well as their contact information, and a sort of breakdown of the different power purchase agreements, the online impact investing platform, as well as some of the incentives there as well.
Thank you so much, Jack. And Navesh, finally, what are your thoughts that you would like to leave with the audience, bearing in mind that we have had some amazing questions coming through?
Yeah, I think from a SAPIA point of view, we're really excited to see the SSEG market growing as it is growing. We see the opportunity in that marketplace to be very inclusive, thereby including more local players, SMEs, and a lot of skills development aspects to be included in there. We do promote the solar PV industry, and we try our best to make sure that we promote it responsibly and we promote it sustainably. And this is the key message we always send out to industries, that when you're playing in this space, make sure you play responsibly and make sure you play sustainably, so we do have a market in the years to come.
Thank you so much, Navesh. A final thought for me is that one of the things that the CNI market has always had as a selling point has been having Wi-Fi in their building. And I think that in the future, one of the things that people are going to ask is whether you have battery storage. So my thanks to our guest speakers for giving of their time and knowledge, and to our listeners for tuning in today for this live broadcast brought to you by ESI Africa and Future Energy East Africa Conference, taking place on the 17th and 18th of September next week in Nairobi. Thank you so much for tuning in, and goodbye.